In this session, we will understand something called as accruals and deferrals in SAP. Okay, what exactly are accruals and deferrals? We will first understand the difference between accruals and deferrals with one example, and then we will see how this can be carried out in SAP. So this accruals and deferrals is also one of the activity that needs to be done in the period end closing before you generate your financial statements. So let's understand what exactly is accruals and what are deferrals and what are the differences between the two. Okay, I can give you the simple example. Accruals are nothing but the expenses which are not booked in your system till now, but you know that they are already completed. Okay, so expenses which are not currently booked in the system, but it has been carried out in a particular month. Just assume we are in the month of April today. Okay, and your company is taking SAP training. So you are a participant and your company is taking SAP training in the month of April. As a trainer, I'll be submitting the bill to your company in the month of May. So once your company receives the bill, they will enter that into the SAP system, and in SAP system, the expense will be booked in the month of May. But in this particular case, that would be the wrong accounting. Why? Because if the expense has been already carried out in the month of April, we should not book in the May, right? So this is one example of accrual. What happens in accruals is, accruals are those expenses which are already taken place in a particular month, but the bill has not received from the vendor, which means they will be booked as expense in the next month. So what is the correct way to book this? We can create the provisions. Now, what exactly the provisions? Provisions means if you already know that this expense has been carried out in this particular month, irrespective of whether the bill has been received or the vendor has been paid or not, we should book this expense in the current month itself. Okay, so that is accrual. So let me enter this example that I gave you. So expenses, okay, to be specific with this example, let's say training expenses or training which got completed in April, and invoice, when I say invoice, this means the vendor invoice. Vendor invoice received in May. So this is a very good example of accruals where the expenses have been actually carried out in April, but the invoice has been booked in the month of May. Right? So what is deferrals then? How deferrals are different from the accruals? So if I take the same example, in this case, what is happening? Training is given first and then the bill is received. Okay, so the training is given in the month of April and the bill is received in the May. There can be the reverse scenario. When the bill has been received, invoice has been received in April and training will be delivered in May. Okay, so deferrals means the expenses are still not done. Okay, so we have still not taken the training. The training will be taken in the month of May. But at the same time, we received a bill. So what will happen is in the month of April, we have to book the expense, which is wrong because the expense should have been booked in the month of May. So in this case, again, what we need to do is we need to tell the system that, okay, we booked the expenses in the month of April, but this belongs to May. So we have to make that proper adjustment so that the expenses are not shown in April, they are shown in May. Right, so this is an example which I gave you from the expense point of view. There can be accrued revenues also, there can be deferred revenues also. Okay, so it will be again same. What is the accrued revenue? Accrued revenue means those revenues which are already, we know that this revenue is already triggered, but the billing will be created in the month of May. right? Accrued revenues means the services has been already provided this particular month, but we'll be able to bill this customer in the subsequent month. So let me write it here. When we say revenues, so in terms of revenues is services already performed, but customer will be billed in May. So services are performed in the month of April, and this customer will be billed in May. Similarly, what is deferred revenue then? So in case of deferred revenues is billing is already created, but actual services will be provided to customer in May. Right, so these are the examples of accrued expenses, accrued revenues. These are the examples of deferred expenses and deferred revenues. So now the question is, how are we going to do these things in SAP system? Okay, so let's talk about a scenario. I'll take one scenario. I think you will be able to understand all the scenarios if I just take you practicality of one scenario. So let's assume that I'll take this scenario. Training which got completed in the month of April, and the vendor receives the you receive the invoice from the vendor in the month of May. So what will happen in this case is at the end of April, okay, there is no invoice received from the vendor, but your company knows that yes, the training was took place in the month of April. So what they will simply do is they will book the accounting entry that would be the expense account. Okay, this would be booked in the end at the end of April itself. This will not be booked at the month of May. In the month of May, when you receive the invoice, obviously whatever accounting entries you want to post, that will be booked in the month of May. So expense account would be debit with whatever its expenses. Let's say it is 10,000 INR, and corresponding entry, because we are not going to specify the vendor here because we have not received the vendor invoice. So simply what we can say is this is nothing but outstanding liability. Okay, we know that this is going to be the liability, but we are just creating a provision out of it. So that will go to the outstanding liability account. Okay, and this will be credited to this particular GL account. So expense debit to outstanding liability credit. Okay, now this I only need to book at the end of April. Okay, because this is a provision entry, I need to reverse it. So I have to do the reversal on 1st of May. Okay, on the 1st of May, whatever entries have been triggered here, it would be exactly the reversal of that entry. So whatever has been debited will become credit, and whatever has been credited will become debit. So expense will become credit and outstanding liabilities will become debit. So if you see the overall accounting, there is the knockoff. Okay, so whatever expense was debited here has got credited, and whatever outstanding liabilities you credited here got debited. Okay, and finally in the month of May, let's assume on 15th of May, vendor sent the invoice. Okay, so what will happen in this case? The actual booking. So actual expense account will become debit with whatever is the amount, and the actual vendor account will become credit, because at this point of time you know who is a vendor and he has given you the invoice. So this will complete the accruals process. So accruals is actually this one. These are the two things that we need to understand in accruals. So in order to execute these two transactions in SAP, we need to have two different transaction codes. This is FBS1 transaction code, and the second transaction which we normally use to reverse is F.81. Okay, so these are the two transactions that we need from the accruals point of view. Okay, let's try to see this transaction now in SAP. So what I'll do is I'll simply go to transaction FBS1. Okay, you can see it is enter accrual deferral accounting document. If you see the difference, there is only one difference here. There is only this additional reversal reason and reversal date. Otherwise, it is just like a normal accounting transaction, right? So you will enter the date. Let's say I'm entering this. I'm going to do this at the, this is a provision entry. So I'm posting this on the last day of the month, whatever the accounting document type you want. The company code should be SF01. In my case, this is also 30/04/2020. Okay, and you can, if you want to enter some document header text for your reference, you can definitely do that. Okay, and here in the reversal reason, the standard reversal reason which is provided by SAP is 05, which is accrual and deferral posting. If you want to create your own, I will show you in the configuration, you can create it. Okay, and the reversal date. So when we want to reverse this, if you see this example, we want to do this reversal on 1st of May, immediately on the next day. So 01/05/2020. Okay, so this is the document that we want to post. And what we want to post? We want to post the expense account debit and outstanding liability account credit. So simply, I will write posting key 40, which means debit. Okay, for which account? Expense account. So it will show me all the list of accounts. I'll select the corresponding account here. So in my case, let's go with this training expense account. Okay, let's press enter. Ignore the warning message. So whatever is the amount. Okay, and obviously if it is a cost, it will require the cost center. So let me enter some cost center here. Again, if you want to enter some text, you can do it. Okay, and the credit entry will go to outstanding liabilities. So 50 is credit the GL account, and which GL account I want to credit? I want to credit, let's assume I want to the outstanding liability. Okay, again press enter, enter your amount here, and done. So now if I go to document and simulate, see what is happening. So on 30th of April, I am posting the accounting document in which I am telling the system that although I have not received this invoice from the vendor, but I know this expense has been carried out in this month. Okay, and the outstanding liability, because I still have not received the invoice, that is the reason. This is the clearing account which I'm using just to just to till the time I'm not getting the actual vendor invoice, right? And you can see it is also showing you the reversal reason and reversal date here itself. Okay, so just click on save. This will generate the accounting document. You can go to document and you can say display. Okay, you can see this document has been created now. And now in order to reverse the document on 1st of May, I need to execute another transaction, that is f.81. Okay, so f.81, you can go to transaction f.81, and what exactly it will do? Here you need to specify your company code. Okay, and if you want to just reverse one document, you can enter that number, but normally this is a month-end process and there can be multiple accrual and deferral documents which you want to post together. So instead of providing the document number, just try to execute. It will show you all the documents which needs to be reversed. Okay, so here you need to first you need to verify with the test run whether everything is working fine. Let's try to execute it. So you can see this is a document which we just now posted on 30th of April, and it is going to be reversed on 1st of May. So if your document is coming here, everything is fine. You can just remove the test run and you can actually do the actual run, and system will create a reversal document for you. All right, so that completes the second part, which is the reversal on 1st of May. And once you receive the actual invoice on the 15th of May,